This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. My guest today, and I don't know how many times he's appeared exactly on this podcast, but my guest today, Tom Basso, is probably one of the top 1, 2, or 3 guests that helped to make this podcast, arguably number one. As typical with Tom and myself, we cover all kinds of topics in the trend following space, the life space, the market space, a wide range. And just remember also, my book about Tom, Trend Following Mindset. Check that out. Without any further delay, let's jump right into my conversation with Tom Basso, and I hope you enjoy the ride. How do you feel now, and how does society feel now? Your observations, your self-observation, and your observation of society.
I personally have been very content to sit back and watch what seems to be a whole lot of carnage out there. I feel for people who are getting hurt by it, but at the same time, many have not really planned very well. I know you're into trend following, I'm into trend following. Being a trend follower has been pretty easy lately. You just should be either short or out.
On equities, you mean?
On equities, but bonds had a run down too. Energy prices have had a huge run up. There's been a lot of pressures on the economy, inflationary pressures, interest rate pressures, all that stuff. Yet if you're a trend follower, it was relatively simple to position yourself so that you would be very content right now.
You feel content. So you personally, you're A-OK. You're the same Tom that's been the same Tom for decades. You've got your life rules set. You've got the way you want to live. The last 4 or 5 months have not changed any of that for you.
No, if anything, my wife and I decided on a 4-part plan to sell one of our 2 houses. We moved up to the mountains into our second home, which we do every summer anyway. So no change in plans there, except we booked a massive profit on the sale of the place down in the valley. And my wife, the real estate expert and full broker and everything, is tracking statistics on the real estate market in Phoenix and is already seeing 4 to 5 times the supply on the market. The time on market is starting to creep up. Prices haven't really caved that much. They're probably going to when all these people get a little more itchy. The fact that they're not selling their homes at premium prices like they were. The second part of the plan is to take the equity and give it to a money manager. I happen to know one. So I'm running more money these days from the sale of our other property. And then phase 3 is to go out and start looking when the prices start caving in next winter sometime. We'll probably be out looking at places. Phase 4 would be to build out a new house with a sound studio for me so I can deal with all these interviews I do lately, ability to do a little bit more professional webinars, some videos that are just help videos for traders. I want to talk a little bit more about trading platforms and how to use them properly and not use them, or how to use them improperly, let's say. I'm very content that we're going through the pre-ordered plan, that everything's working out exactly the way we thought. My trading, I haven't changed the thing. I do the same thing over and over again in boring fashion. I've loved the new Substack forum, so I can just say what I want to say if the mood strikes me. So yeah, I'm really content. I don't think the public, if I look at everybody in their tweets and their Facebook posts and the conversations at the golf club after a round, and subject turns around to the markets and yeah, those markets are killing me. And the story about my dentist, I get done with a normal teeth cleaning and I wander out in the hall to pay my bill, comes charging down the hall, the head dentist, and is a lady. And said, Tom, I'm not happy with my portfolio, my retirement portfolio, and I'm not managing it. Why are you coming after me? And she says, this last Friday, I put in my annual contribution. It's Wednesday, And I've lost so much money in the last 3 days, including this morning, that my whole account is back to where it was before I put the annual contribution. I just wiped up my entire annual contribution in 3 days. So I politely asked, well, what are you doing with it? And who's managing it? Are you coming up with these ideas? We'll skip the name of the major brokerage firm everybody would recognize. I have a financial planner. He says to do this. We have some bonds. We have some stocks. And I said, and you have no risk protection. So when the stock and bond market goes down, you're going to go down. That was by design.
You mentioned that you had put some money with a money manager. I'm not prying on names, but I want you to clarify because people need to be aware that you're not doing that because you don't know how to do it yourself. You're just at a certain station in life where it's like, hey, I'd like to enjoy life. Yes, I like to trade, but I've got somebody I believe in. I understand their philosophy. I understand their method. I understand what they're doing every day. I'll let them do it for me because they're a younger shop than me. And I think that's where you were going with that.
Yeah, for my portfolio, I have a little money at Standpoint, which I'm the chairman of the board. I've known Eric Crittenden forever. I think you've interviewed him somewhere along the way. He's a brilliant young kid. He could be my son. He's getting a little older these days. His beard's getting a little gray.
Hold on, he's got to be in his 40s or early 50s. You can't be calling him a kid still. That's not fair.
I'm a month away from 70.
Did you call yourself a kid when you were 45?
Well, compared to the 70-year-old, I mean, he could have been my son. I think he's 49 or 50 right now, something like that. Eric's a sharp kid, and I get to watch from a distance as a chairman of the board. And I have the pleasure of running quarterly board meetings, which lately, because of the success of Standpoint, have always been a lot of fun to run. I just felt like things like my IRA. IRAs, if I trade them myself with the actual futures contracts, my broker has told me that they'll do it because of who I am and I know what I'm doing and everything, but they'll triple my margin because they want to protect themselves. They can't go inside an IRA and extract more money like they could from me personally in my personal account. You start looking at triple margins and all that. It's just easy to pick up a chunk of the IRA and go buy a mutual fund, which is what Standpoint is, BLNDX.
Let me take it back to your dentist, though, because the dentist story, I think we can get a lot deeper here because that's just the surface level of her experience in the immediate short term. And I'll be curious to see where you like to take this back to, but I'll give my quick rundown. I can say, okay, we go off the gold standard. We have the 73, 74 bear market. We then have the inflation run up in the 70s. We have Volcker jacking rates up to kill inflation in the early 80s. We get the 87 stock crash, the Greenspan put. Then we get the dot-com bubble. We get the dot-com bubble crashing. They jack rates down again. They create the big short bubble. They jack rates down again. We get the current bubble. Is there a starting point for all of this? It just feels like that the system is playing with people. And the people don't realize they're being played with until one of these bubbles bursts in any given generation. Give me your feeling on this. It's a very deep thing, I think, that what's been happening for decades.
It has. I think the Fed's done a terrible job. I mean, they're so late this time. And they talk about trying to do a soft landing. My God, they've pushed it so far. I don't think they can pull that off anymore. They just don't seem to be able to have common sense. I think a lot of investors, maybe in particular the dentists of the world and the doctors and the people running businesses, they're very busy. They're already working 9, 10-hour days. They just don't have time to sit there, pull up a quote screen and go through 60 positions like I do and do it quickly and efficiently because I know what I'm looking at and I have it all pre-programmed on, okay, this strategy, this is what I'm looking for. I got to look at those indicators. And if I have to move my order, I move it. If I don't, I leave it alone and I move on to the next item. It takes me somewhere between 40 minutes to 50 minutes or something like that to get through the daily work. These people do not have that 1 hour a day to spare. And they don't seem to learn from history. Like you said, you've just mentioned and ripped off about 9 bear markets probably in the last 4 decades, something like that. Bear markets happen. Do you have a plan for one? The vast majority of the people out there just don't seem to have a plan. They think you go up and when it goes down, you just hold on for dear life and then until it goes up again. That's their plan. And that's not much of a plan.
An interesting point right now, too, is while we we're probably technically in a bear market on many of the equities. Unlike, let's say, '02, where they brought rates down to create a bubble, or '09, where they brought rates down to create a bubble. Now they've got inflation. It's a different scenario, isn't it?
Yeah. The Fed's backed into a corner because on the one side, you got interest rates. You don't have that great of employment numbers, despite what you hear out of Washington. I don't see what they're looking at. Not as much participation. There's still a lot of jobs being offered and not being filled, and people are having a hard time. You go out to half the restaurants around here and you get apologies in the front door. We're a little short staffed. It might take a little longer for your order tonight. Just be patient. We promise we'll get to you. And all sorts of excuses and supply chain problems and can't find enough people. And yet it's not extraordinarily low unemployment numbers. I think the economy is in a recession as far as I'm concerned. Whether officially it is or not, we'll find out in a few weeks, I guess. The preliminary numbers indicate that it's a recession. It sure is acting and looking like one, but you're right. You got inflation at the same time. You got commodity prices. I mean, wheat has had this huge run up and then they're having run down, and unleaded gas was down some ridiculous amount today. At one point, it was down 9% plus on the face value of unleaded gas. That's crazy. For the commodity traders out there trading futures and all that, like I do, and like Standpoint does, those are all good things because movement means potential for profit. It also means potential for risk. But if you have a plan and you can attack that risk, which I think is the proper mental state to have, not defend against it, but to attack it, go on offense instead of passively just trying to sit back and hope it doesn't visit you or try to come up with some way of avoiding the risk. Attacking it means you really have tried to identify it and do something about it. And it's much more empowering mentally, I think. I've attacked risks a number of different ways with what I do with my portfolio. They've all worked to a greater or lesser extent. I'm sitting here basically sort of unchanged across everything, and people are down 20, 30% in their stock portfolios and wondering what hit them.
One thing that we should point out, and we've done this over many podcasts over many years, is that while you might offer, and I generally concur with just about everything you say about the economy, the Fed, et cetera, you might have that perspective. You might have that view. You might offer a criticism of the Fed. But unlike a talking head on CNBC or Bloomberg or somebody on YouTube, you're not turning around and holding up a four-leaf clover or guessing. You've got like a system. So on one side of the ledger, we have Tom, who's a smart guy, who's got his understanding of economics, his understanding of the Fed, his understanding of how the world unfolds. On the other side of the ledger, when it comes to your trading, you have a rule set. And that rule set says you're going to do this regardless of what Tom thinks about the Fed taking an action. And that's a really important distinction that I think if you and I have this conversation, I feel like I always need to make that reminder. It's a subtle thing, but it's extremely important.
Tom, the economist, has fun predicting, just like everybody does, but Tom, the trader, is pretty mindless. I spend a lot of brain power creating a strategy, and I've got 9 of them that I'm running right now. As I've had more dollars keep coming into the portfolio and it gets larger, I like to try to spread it around to greater amounts of markets, greater amount of strategies, and greater amount of time periods. So I'm trading more short, medium, and long term, and I'm trading on a given day could be as much as 60 positions. Right now, because of the bear market, I'm probably running closer to 40 positions. That's a lot of diversification. I call it extreme diversification. You got so many different strategies going on there that at any one time, a very short-term strategy may actually go long while a long-term strategy is still short, and they're sort of offsetting each other. All sorts of things dynamically are going on. What's weird about this whole thing is on the one side, the Tom, the trader, has been very content and very happy with what he's doing. Tom, the citizen of the US and citizen of the world, looking at how life might be ahead of time, is not real happy with the way things are going.
As I observe from 8,000 miles away, I'll be very blunt. I don't really see that this is not an objective view, but the things that bother me the most about observing my country, considering I've been in a country for the last decade that doesn't have these things anywhere close to the scale that America does, it just unnerves me. The two issues that are unnerving me the most, you're welcome to say, Michael, I don't want to comment, or Michael, I'll go there. But violence and deviancy are leaving America not civil. And it's really bothering me because civility is so important to have the fiber of society be civil. And it seems like it's slipping away.
Yeah, I mean, back in the 250 years ago, the Brits were always so civil that they put on red uniforms and lined up in front of the front line so that you could have target practice. That's how civil they were. And I think the world has been degrading America, where the rabble rousers revolted and formed our own country and all that. But it was very civil in the early days, and it's just gotten worse and worse and worse. And the stuff every night. Yesterday, some guy shoots up a 4th of July parade. And he's a complete wacko. So many people could have knew of him and warned the cops even. The cops even went and visited his house and talked to him and didn't do any good.
My parents are in their 80s. They live near Tyson's Corner Mall, which is 15 miles outside of D.C. Tyson's had one of these gangland shootings recently, and everybody's running out of the mall. This used to be the suburbs. Is there a randomness to this where you take different actions? For example, if your wife goes out and she's alone, or she goes to the mall, something that you never would have thought about before, are there sides of you now where you start to be like, man, I got to be almost like a 25-year-old guy defending my lady? It feels crazy, Tom.
Both my wife and I have concealed weapons license, and I carry 100% of the time. And I never thought I would have to do stuff like that. And it's a pain in the butt to do it, but I do it. When we go into a restaurant, my wife now knows that her back is to the front door. I want to keep my eye on the front door. I'm watching people come into the restaurant and trying to decide, are they shifty? Are they looking around just to get a jump on the situation?
You know what I find frustrating about bringing this up is there might be some people listening and they immediately try to classify me, or they classify you, or whatever. Whereas I really think from a basic risk management standpoint, we're just being objective. We're dealing with the situation as it comes down the pike. And to put one's head in the sand in 2022 and pretend that these things are not happening makes no sense.
Doesn't make any sense at all. And I hope and pray that I don't ever have to pull that thing out and use it. I just look at the reality. I think the reason we're in the mountains is it's a small community. We've got less than 20,000 people here. A lot of people know each other. A lot of people are very armed in this small mountain town because there's a ton of hunting that goes on. So a lot of them have hunting weapons and all that. There's a lot of retired law enforcement here. We've got an airport that has a subdivision next to it where you can park your plane in your own hangar at your house and work on it. And then you go out your driveway and you connect into an extraordinarily wide road that the cars get out of your way, and you can taxi your plane to the end of the runway, hit a garage door opener, the end of the runway opens up, you get clearance and take off. You can imagine all of the military flags in front of every one of these homes. Oh, that guy's Marines. Oh, that guy's Air Force. Oh, that guy's the Coast Guard, and so on and so forth. We got our own Air Force here. It's kind of an interesting environment to be in. It's generally very conservative on the political side of things. And there's 3 roads in and out, mountains around us everywhere else.
I think you're giving a great sales pitch.
It's a nice place, and we love it up here in the summer. It does get 20 inches of snow a year and melts pretty quick, but it's a beautiful pine forest. I think on my Facebook background is a picture out the back deck with all the pine forests and the mountains. It's very peaceful. Mr. Serenity likes peace and quiet, and I have a beautiful office I can sit in, and it's cool. It's down in the lower level of the house, so it's kind of right next to the wine cellar, and everything's kind of cool. And so during the summertime, if it's getting up in the 90s or 100 or whatever, I'm just happy as a clam here.
What I love about how you describe so many things in your life is it's not just the risk management of trading. You've just described the risk management of life. I don't think you're sitting around having these huge worries or this or that. I think you're kind of looking at it saying, okay, this is the hand that I've been dealt, whether it's a trading hand, whether it's a life hand, this is the hand that I've been dealt. How can I objectively, from a risk management standpoint, deal with this situation and then live the most normal, peaceful, happy life that I want to live? It seems like such a smart way to go through life. And I'm not saying you're the only one that does this. I try to do it myself.
You are Mr. Intentional. You decide you want to live in Vietnam and you move all the way halfway across the world to live the lifestyle you want. So, yeah, I'd say you're quite a bit that way.
I really detest the violence. Somebody might say, well, hey, 1970, there was a lot of violence in Vietnam. Well, there was a lot of Americans in Vietnam then. So these days, it's just kind of a Buddhist, peaceful place. No place is perfect. Every place has its rough edges. But overall, I detest violence. I don't want to be around the risk of it. Hey, let me shift you back to something. This is going to get you into your early days and your analysis of the current days. So here you are. You're a guy that cuts your teeth on futures contracts. You know a lot more about Chicago exchanges than the average person. A lot of things have changed about Chicago exchanges since back in the day. You know, they've gone from the floor to electronic, all that fun stuff. But there's a liquidity issue. I interviewed Leo Malamed once for this podcast, and I've seen his books. And there's a liquidity issue built into futures contracts that goes back a long time. There's all kinds of safeguards built into futures contracts. It's not perfect. We've seen assorted brokers and things happen. I think the London Exchange recently, things are not perfect, but it's pretty damn good. What I want you to contrast that with and give me your thoughts and perspectives. I've been watching seemingly on a daily basis, and I was unfamiliar with these operations, the crypto exchanges and banks on literally a daily basis with often billions under management that are just raising their hand and saying, oh, I'm sorry, we have locked your account. You cannot remove your money. You can't transfer your money. Stay tuned for an update. The numbers of exchanges and banks in the crypto world that have done this, off the chart. So I think it's an interesting contrast to look at your early upbringing, futures contracts till today, versus a lot of young people that otherwise maybe would have discovered futures contracts have now gotten stuck holding the bag in the crypto world by a system that's just nasty.
I tried to experiment with crypto. I was having such a difficult time even opening an account because my taxable side is in a normal family trust, which in the US is fairly common, especially with higher net worth individuals. It should be a piece of cake to open up a crypto account in a family trust name, but I gave up on one firm. We'll go nameless. I just told them, I don't think you really want my account because you're coming back and asking for the same pieces of paper over and over again. And I've sent them to you already. And I don't think you even understand what type of business this is or what kind of account it is. I ended up out of frustration, and I guess happy that I did, saying to myself, well, Bitcoin and Ether have futures on the CME. I can go long, I can go short. You can't really short cryptos that easily. I guess you can at some places. I have no idea how that works. In the futures markets, it's just a standard open the contract up and close it down, and you got the exchanges standing behind it. So there's protection mechanisms. You can go two directions. I've had one losing trade, and I've been trading now for over a year probably now. One losing trade, tiny little bit. All the rest was trend following, huge winners.
Let me phrase it to you this way. Back in the day, when you first were getting involved in futures contracts, was there a certain due diligence that you had to do personally to convince yourself, hey, if I put my assets here and I get gains or losses or whatever, I can get my assets out? Was there a certain due diligence you had to do?
I had to look at the firm that I was at, number one. Number two, I had to try to decide, how does the exchange and all the broker dealer or futures commission merchants that are part of the exchange, along with operations back in those days, there wasn't an NFA, but that soon came in, but CFTC and all, how does the backing of the reserves and all of these broker dealers or futures commission merchants back each other so that if one goes under, what happens in that situation? And I had to also then go to the third level of my own account. How much margin do you need to carry a reasonably leveraged set of portfolios? And I decided, based on margins back in those days, that somewhere around 15%, no more than 20, for a fairly diversified futures portfolio was sufficient margin personally to carry it. That gave me 80% cash sitting in T-bills or something else to help protect it from a default situation. Because if you got a T-bill, it's not sitting in the credit balance for the broker. It's a securities position backed by the government. Yeah, there was layers, not only from the exchange level down to the FCM level, down to my own level.
Do you find it interesting? And I'm not sure how much you've paid attention to some of these headlines of the crypto exchanges and the crypto banks, Celsius and some of these others that have literally just shut their doors and said, you can't have your money back. I've never had that happen to me, but the feeling to have that happen, it's not a fun feeling, but it also brings me back to the point of the amount of trust that people put into a brand new system with no safeguards contrasted against the system that you were exposed to as a young man. It's quite a different story.
People don't seem to bother to do that due diligence, don't even ask those questions, don't even think about it. And they may have 100% of their money with one house. If I was going to do cryptos, and I still am working on trying to do a little bit, I guess to become experienced and to be able to answer people's questions, at least understand how the transactions occur and what the positions are. I'm not putting enough in it that would ever get in my way financially. But when I look at the process of opening this stuff up and how restrictive it is to try to get it to open, and then once they do get it open, they've got 100% of their money. I remember doing the experimental thing and making an insignificant amount of my investments, and I'm still spreading across basically 3 different types of exposures to cryptos. I'm doing negligible amounts and diversifying it 3 ways, and a lot of people aren't diversifying at all. And they got 100% of everything in there. It's crazy.
There's another issue to this liquidity logjam right now with the banks and exchanges freezing assets. If you've got a system where, let's say since December, I think just about every piece of crypto, including Bitcoin, has come down 60 to 90%. And now you've got a situation where they're locking banks and locking exchanges with Bitcoin at approximately a $20,000 level. Of course, this is not a trend following perspective. It's just a question between 2 people trying to figure out a bad system. What in blazes happens when markets have collapsed that much in 6 months, and then you tell people whatever money you still have left, you can't get it back out right now? What in blazes happens the moment when they say, well, now you can take your money out?
And the reason this is all happening is if you've got clients at the exchange that you've allowed to do 2, 3, 4 to 1 leverage on their crypto trades, and the people in the market move so fast that they can't get out of that position, or the firm doesn't have the protection mechanisms in place to be able to bail them out and just close down their account for them because they were wrong and we're going to prevent the firm from being hurt. It turns out the traders themselves don't have enough money to come up and pay back all this debt and the leverage that they're taking on. So then it falls to the exchange. The exchange doesn't have enough to take on all of these people who are all leaning the same way. The exchange gets into trouble. Then they don't have the money to pay off the people who didn't take the leverage. So one of the keys I would always encourage people to do, and I'm certainly doing it myself, is to look for exchanges and people doing cryptos that are not allowing a whole bunch of leverage. If everybody has 0 leverage within an exchange, you're never going to have an issue. It's going to be like watching paint dry.
I think a lot of young guys that maybe had a certain libertarian mindset, which I know you do, which I do, a lot of young guys coming of age, coming out of the 2008 crisis, this is where Bitcoin was starting to germinate. I think their rationale, hey, we don't trust you guys anymore. We want out of this. It's kind of a damned if you do and damned if you don't system, because in the sense, they have, if they got into Bitcoin early and they kind of took a lucky move, they've made a bundle of money. On the flip side now, we're seeing what can happen. We could very well see that their fear coming out of the 2008 crisis 14 years later could be playing out right now too. It's a really messy system we're in these days.
Why not look at each market? I know you do this, but if I'm trading, I think it's 28 futures and commodities markets, currency markets, precious metals, energies, all that stuff. I've got extreme diversification. They go in two directions. Energies have gone up a lot recently, but they also went negative during COVID. Oil prices went negative for one day there. Why not just accept the fact that markets go up and down and figure out a way to create a strategy to deal with it? It's not that hard. The people that got kicked in the teeth in 2008, it's again a story of not having a plan in place to deal with what you know is sooner or later going to happen anyway. You put yourself in harm's way, and you don't need to do that. As a trader, have a plan for an up market, have a plan for a down market, have a plan for a sideways market. Understand that markets are going to do all three of those things and know what to expect with your strategy in all those three different conditions. Then life is good and you can be Mr. Serenity because nothing happens that's all that surprising anymore. But for people to rush away from stocks and go into cryptos just because stocks kicked them in the teeth is kind of an example of somebody saying, well, I didn't handle that well, so why don't I learn from it, handle the next one better? No, they just say, I'm done with it.
And if you think about, or if the audience thinks about this year, okay, Mike and Tom are having this conversation. Tom's giving these views and perspectives, not unlike the many events that I've put in my book, Trend Following. The first 4 or 5 months of 2022 are historic for trend following performance. Historic, just off the hook. When this happens, though, what's always interesting is that trend following will prove itself in one of these moments, and then the naysayers. So I caught a clip. Katie Kamensky, who's been on this podcast, a trend following lady, she was being interviewed on some Bloomberg or CNBC. One of these voices, I forget the guy's name, has been around for like 4 decades saying the same nonsense. But she was talking about what I just said, the performance of 2022. This guy, and I'm not sure whether he was doing this because he didn't know or he was just being disingenuous. He's like, oh, yeah, it's going to be like a long-term capital management. How much leverage do you got? Literally a complete disconnect. Again, whether he did it on purpose or he doesn't know, but so interesting because you know that when long-term capital management went under, who made money? Trend following traders. It's interesting that I think the lifestyle, the mindset that Tom has, it's never going to be accepted.
That being said, I got 43,000 followers on Twitter that seem to hang on every word that I write. I've helped a lot of people out there. I know that a lot of people like reading my stuff, but if people could just pick up bits and pieces, I'm not saying everybody even should try to trade like Michael or Tom trades, because I'm more of a believer than most, I would say, that because my situation, my skills, talents, computer expertise, capital, size of capital I'm trading, the amount of time, because I'm retired, that I can address trading my own portfolio is different from everybody else in the world. There's no way that everybody else in the world should try to trade like Tom. They should try to learn from Tom and Michael and others that have some good ideas, perhaps. But you've got to still get it down to tailoring it to yourself. It's the only way you're going to be able to successfully execute it flawlessly every day. If you're doing something that somebody else created and it doesn't fit you, you're going to have problems. You're going to make mistakes. You're not going to feel comfortable. Your mental side's screwed up. It's not the sweet spot. I like to try to help educate people, but I try to constantly implore them to create their own strategy. The trend following covers, as you know, a wide range of indicators. And I know you've got your flagship program that you have. That's one trend following strategy, sort of. There's probably 10,000 others out there too. Conservatively, there's a lot of different ways that you can create what you create. You can do it longer term, you can do it shorter term, you can do it medium term, you can trade futures with it, you could trade ETFs with it. There's just a lot of different things you can do with it.
If we pick that classic trend following mindset, that classic trend following strategy, and I still recall going through the performance data of people like yourself and others back in the day, that interesting correlation. Now, of course, there can be different trend following strategies in that correlation, but when trend following works, trend followers make money in the same months. They lose money in the same months often, generally speaking? All those qualifications.
The big guys tend to because they're all in the same instruments. So the instruments make big moves, they make big money. If instruments do not make big moves, they lose money.
Let me shift you to something that's really interesting that's been happening to me. And I've heard other people say this. Have you noticed? I think you're going to say yes. The Indian subcontinent. Have you noticed how many people in India have got an interest in trend following? Watch out, because I'm telling you what, they're coming with gusto to learn, aren't they?
I've given 2 keynote addresses in India, virtually, obviously. I really don't love getting on a plane, and especially don't want to get one and go that far away from home. But virtually, it's pretty easy for me to help out people. And of course, English, it was a British colony back in the day, so the English is fairly common there. There is, I'd say, a very large percentage of people that visit the enjoytheride.world website that I run. It has all the educational books, and I have a link to your trend following book, for instance, links to some of the interviews that you've done with me in the past and other people have done with me. I get a Google Analytics on where people come from IP address wise. There's a good percentage from India.
For me, I'm not sure when it started. I'd have to go look through the analytics data too, but I'd say sometime in the last 2 to 3 years, maybe last 4 or 5 years, just the interest. Amazing. Amazing. By the way, we were texting the other day. You said something that you liked the comedy show. You didn't use the word comedy show, but you liked the comedy show between Larry Hyde and myself.
I was sitting here doing some work at the computer the other day, and one of your classic emails comes through and said, "Hey, I got a hold of Larry Hyde again." And I said, "Oh, cool. I'm just going to be doing this nonsense busy work on the computer. I'm going to put that in my earphones and just listen to the interview while I'm working." I was just laughing. He is a riot. He inspired me with all my position sizing. And then I wrote a book about it now. It all started out with Larry. Mint was who we looked up to. And I was just coming into the business as a CTA, and everybody looks up at Mint at $1 billion. And wow, these guys are gods. I learned something from his chapter in Market Wizards that was a profound mathematical opening of my mind to a whole new set of.
He's losing all filter, which I love. There's no filter anymore.
There's a few 4-letter words in there. That's Larry.
I mean, I know you're a pretty pragmatic guy. You're pretty serene in control. Do you think your filter will go away more and more in the next couple of years?
I don't see the need. I'm not one for using 4-letter words a lot. I'm very happily married. I enjoy my life with Brenda. I don't find the need to use a lot of 4-letter words. It's just the way I was raised. I don't know that I'll ever change that. I may go senile.
I doubt that. My audience is already sitting there saying, Mike, Tom just told you need to stop using all those bad words.
No, I don't care. People should talk the way they want to talk.
Sometimes in the last 10 years, I'm sure I've used too many. I think sometimes for effect, okay, or if it's passion, if I do it, it's subconscious. I don't think about it. Maybe this is just the rough and tumble sports upbringing that I had, that you just can't lose some of that. From what I've heard, Tiger Woods did quite a bit of swearing in his heydays.
Oh, yeah. And you'll hear every now and again, CBS or one of the big network channels will not have the 5-minute delay, hit the button properly or whatever. And you'll hear somebody teeing off and it's headed way out of bounds. And you hear the 4-letter word is uttered or shouted, and they can't cover it up. And then the announcer comes in and says, "Ladies and gentlemen, we apologize for."
I think I saw you commented when I said something about the new golf tour. Somebody with a deep pocket shows up and says, the old system's not working so good. And the guys say, hey, we're going to try the new system.
And I'll tell you what, my wife and I have come to the conclusion. Brenda and I watched the first one in England, and it was pretty confusing. And it was on YouTube, so no commercials. That was nice. You could fast forward to push through if you want to go closer to the end of the tournament or whatever. Because everybody's going out there at the same exact time, and it's a shotgun. So there's somebody on 1, 2, 3, 4, 5, all the way up through 18, and everything's happening simultaneously. There's a lot going on. It's kind of hard at first to follow, but then what you end up with, we watched the second tournament just now that was in Portland this last weekend. And we're kind of old pros now. We know how the teams are set up, and we know the 2 out of the 3 scores the first 2 days count, and 3 out of the 4 team scores count on the 3rd day. And it's 3rd day, it's all over. And here's the money breakdowns. And we really enjoyed watching the Portland tournament. It was very exciting. The choice on the PGA Tour was the John Deere. I don't know how many people watched the John Deere. A guy named JT Poston, who's not exactly a household name in the industry, went wire to wire and won the thing. The top 5 on the leaderboard were not exactly the Tiger Woods, Phil Mickelson, Brooks Koepka, those types of guys. There was actually a pretty good competitive situation where Liv actually had a fun tournament to watch. We didn't even watch a single bit of the Iowa tournament.
I'm not a huge golf fan, but I hear enough in the sense that I've heard so many of the PGA players say over the years that their voices weren't heard or there wasn't a way to participate in decision-making and whatnot. So when an upstart shows up with a big bag of money, and that's what the program is all about, a big bag of money, I love that kind of competition. I love seeing that.
Think about this. We'll just create a weird example. Dustin Johnson lives down in, I think, Jupiter, Florida, on the East Coast there, close to Tiger Woods and all those guys. Let's say the Honda Classic next year is going to be at West Palm Beach. He might say, I kind of like that tournament. I feel like I'm playing at home. I'm going to go ahead and try to sign that up. But the commissioner has said, no, you are expelled from the PGA Tour. But he was supposed to be an independent contractor with the PGA Tour. Now, legally, let's think about this. If Dustin goes there and say he talks Brooks, who also lives in Jupiter, and a couple of the other guys that live in Jupiter, and they all just decide to go over, hey, let's play the Honda this week. And they're all fairly highly ranked in the world players, but they've been expelled from the PGA Tour. Do you think a class action suit is going to be coming right down the pike? And I think PGA Tour is going to have a hard time justifying banning them for life as independent contractors. That's going to be very interesting. And I think that's on the way.
A contrast to this, my nephew is playing college football. He's starting his freshman year. Skinny guy, 5'11", 170, but fast as lightning. Some of the guys in his conference, quarterback for University of Miami. My nephew's at the University of Virginia, but the quarterback for the University of Miami, I think he's getting paid $12 million as an 18-year-old quarterback. Now, what's really interesting about this is we make the contrast between the new Saudi Arabia League and the PGA. I look at college football now. If you start to get kids that are coming into college football getting paid almost as well as the NFL, you start to wonder, well, some people in college football say, well, why are we letting these kids leave our arms at age 22 to go to the NFL? Why don't we keep all this loyalty money with the University of Arizona, Texas A&M, LSU? It seems like all of the sports world is ripe for these kinds of breaking things apart with new competition.
I don't know what JT Poston won at John Deere Classic, but they've been coming in high 1 millions, like 1,000,008, 2 million roughly this year. Most of the purses are in that ballpark. That's first place. Dustin Johnson and a guy named Patrick Reed tied for 3rd and 4th, basically. They were both on the same team, and that team won. So coming in 3rd and 4th, they made about $1.1 million. Because their team won, they picked up another $750,000, which if you add that up, is equivalent to winning the John Deere Classic. So instead of winning, just coming in the top 3 or 4, which these guys are good enough to be up there in the top 10, the last place guy in the tournament took home $120,000, which still pays for his net jets home. He can fly private when you're pulling down $120,000 from the last place.
I love any situation where somebody with skill, I don't care if it's sports or whatever, if somebody with some skill and there's an audience that wants to pay them, I say go for it. There's not a bone in my body where I would ever be like some jealousy or you must do this because we feel this or whatever. No. The individual, as you say, the contractor, if the contractor has the skill and somebody wants to pay him the money, I say round of applause, bring it on.
That's capitalism 101. I don't understand why anybody could be anti people making money. If you look at what happens with that money, doesn't it go back into the economy somehow? It either goes back into capital formation or it gets spent. Goods are bought in the stores and that gets multiplied and makes the world go around. And Dustin Johnson can only eat so much food. I mean, he's got enough money to be able to live his life. That excess money goes off into all sorts of places to help spur the economy. I don't see any downside. The big downside tends to be is if government gets their hands on some of it, then it tends to go into the black hole and get misused and very inefficient use of capital.
I love the idea that in a society, there are people with higher skill than myself that get paid a lot more money. Now, some people might say, well, that sounds crazy, but I love it because it sets the bar. It gives you aspiration. Now, maybe I will not be going down the path of being the pro golfer, but it doesn't matter. There's something else I can do. There's something else you can do. Anybody can do. So I love these aspirational high bars. On the flip side, clearly, I think in modern day, too many people have got that system messed up in their head where jealousy is too much of a factor, when jealousy is just such a defeating factor.
Jealousy is absolutely pointless. It somehow says that I'm not happy with who I am. I'm not taking responsibility for who I am. This guy was lucky, or this guy, I aspire to be him. But what's wrong with being you? There's lots of traders out there, tons and tons of traders that I grew up with in the industry. I retired in 2003. I could have kept going, and who knows, I'm managing $1 billion now or whatever. And I would have a higher net worth than I do today. And it wouldn't change a darn thing in my life, except I would have missed out on all these last 18, 19 years of happy retirement with a smile on my face. I really have enjoyed retirement. It was a personal decision I made. It was the right one for me. I could have had a lot higher net worth, but it wouldn't change anything. I'm not a guy who wants to have a house in Vietnam and a house in the United States, and let's put one in the Bahamas too, and maybe one more over in Gibraltar or whatever.
That sounds like a lot of work.
Yeah, it is. I mean, just having two houses within 90 minutes of each other is a lot of work. And I'm seeing right now, being down to one house and having sold the other one, I'm saving like $10,000 a year just having one house, because I don't have to pay taxes. I don't have to pay electricity or the garbage or the water or all this other stuff and fix things. Life's a lot easier. Having a lot of possessions is not the road to success and happiness in my mind. Less is more.
I'd have to find the email, and I'll leave you with this one. Somebody texted me recently, and they must have gone through your historical track record, and they decided in their hypothetical future mind, it was not enough for them. And they were telling me, well, I need to be making more like 200% a year.
Yeah, okay. Enjoy that ride. I'm retired. I don't need to make 200% to have a nice lifestyle. What I need to make sure I don't do is blow up to the point where I got to go figure out how to make money again or something. I'm enjoying retirement. I want to stay retired.
Well, Tom, cool stuff. I've kept you again. Time flies with you. It's always easy to talk. I appreciate that.
It's so easy. I love your interviews. I'll do them anytime. You just give me a call or send an email.
The thing is when you do this, I've done so many episodes, you do it, you start to lose track of time a little bit. And you're kind of like, well, hold on. I've not talked to Tom for a while.
Well, you can call anytime. You're so, well organized. I get on some interviews and they're scrambling to try to set up the mic, and they're trying to get their camera right, and the lighting is screwed up and the internet's freezing up their screen and all sorts of weird things. You have this down after doing like close to 1,100 of these things or whatever. You have figured out how to do it, I think.
Where can we send people, Tom? The Enjoy the Ride website?
I'm on almost all the social media one way or the other. Twitter's the largest, and that's at Basso_Tom. And be careful, because there's about 6 or 7 imposters floating around that I seem to try to block and report, but never quite sure whether they've disappeared or not. Of course, enjoytheride.world is my website, and it's got a lot of educational material for traders. A lot of it's for free. Some of it you can buy certain books or recordings. You can always go to standpointfunds.com and see what I'm doing as a chairman of the board. My picture is about the only thing that I'm contributing there, pretty much, although I'm kind of the grandfather that gives them fatherly advice when situations come up.
I should also interject also for the audience, the win-win proposition for Mike and Tom. Go pick up the book, Trend Following Mindset, which is about Tom.
It's a reasonable book.
I'm not letting you get in charge of marketing our book. It's a reasonable book. That's not exciting enough.
Michael's got half of the book because those are the questions, and Tom's got the other half of the book, which are the answers. That was, though, a great project for us to do during COVID. There wasn't a whole lot else to do, and that was a lot of fun.
It might be my favorite book cover of the ones that I've done, really. It's really cool. It's simple, but it's just fun. I give the publisher credit for that. Usually publishers come up with book covers that look like first graders did it with crowns, but they did really well in this one.
Brenda takes great pride in the foreword. She continues to say that that is her personal favorite part of the book. And I have to say, every time I read it, I break out laughing. She nails me so well. It is hilarious. We have a good time with that too. You decided the subtitle, somehow it was The Legendary Tom Basso or something. So she goes around introducing me as, this is my legendary husband.
You just have to pull up your phone and show your friends the cover. You're not saying it. Some guy named Mike said it. Tom, go have a wonderful evening.
And you have a wonderful day in Vietnam.
Tom, take care, man. I appreciate it.
All right. See you, Michael.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, Trend Following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.